Jim, 2025 turned out to be a decent year for small caps in the US. What were the key trends as we closed out 25 and going into 26?
I think you really need to start with April, with the sort of the tariff fiasco. Most of the companies we were talking to right after the tariffs came out were effectively frozen. It was very difficult to make investment decisions, as you'd expect. And as that sort of calmed down, you started seeing a normalization. And I think one of the things that was lost in the tariff argument, which we thought was going to be important, was the deregulatory impulses of the Trump administration, which again are good for small caps, and they're particularly good for U.S. investing, the whole reshoring phenomena, things like that, as our companies tend to be highly focused on domestic production and sales. So all of the things that have been positive should still be there. You're starting to see a lot of government funding flowing through, whether it was the BEAD Act or the Biden administration's Infrastructure Act, and now the Great Big Beautiful Bill. All these things should be very positive, I think, for the economy. Another thing that doesn't get talked about much is the Fed has sort of stopped their quantitative tightening campaign. So the environment, I think, is very good for the economy, which you need for small caps because you need relative earnings growth to really get a period of outperformance.
You've got the one big beautiful bill. You've got the tariff checks coming in to every household. Yes, you've got some political uncertainty. Are there any other clouds on the horizon apart from politics?
There's still some potential with all the government spending coming in and the Fed cutting rates that inflation could reaccelerate. My personal opinion is you're at the point where AI is really starting to drive legitimate productivity in the economy. The other issue relative to AI, and this would be relative to our portfolio too, we tend to be overweight technology, and we tend to be overweight industrials. And I think a lot of these companies are benefiting from the AI spend that's going on today. We specifically look for companies within that supply chain, and they've clearly been benefiting. And the big question is AI spending in a bubble? I don't think so yet, but at some point it will get that way, and we'll have to worry about what's going to happen downstream.
What other sectors are you focusing on in 2026?
Well, our portfolio tends to be economically sensitive, so we're overweight tech, as I indicated. We're overweight industrials. Our most recent overweight has been natural gas. We see two big step change functions for natural gas. The first being obviously AI data centers, which need to be powered somehow, and we think a lot of that's going to be through distributed natural gas power. We think you could see a 10, 15, 20% increase in demand for natural gas. We get the question of the Mag 7 versus small caps, and it's been a tough environment for small caps, and earnings have been pretty challenged. But you do seem to be at the point where the Mag 7, just because of and I love the Mag 7, don't get me wrong, but the law of large numbers are starting to catch up with them. And if you do get this acceleration in earnings related to strong earnings growth, valuations in small caps look very attractive.
Jim, thank you very much indeed for a very broad view of US and US small caps.